And welcome back to Business Nigeria. I have with me in the studio Mr. Akinfemiwa, CEO of Forte Oil, and the Chief Financial Officer, Mr. Julius Omodayo-Owotuga. Welcome to the show, sir.
Thank you very much.
It's a pleasure to have you. Also, we have with us Btva's Head of Research, Adeboyega Olatude, who's going to be running us through some numbers. Now, Boyega, Forte Oil acquired a power asset, which basically took them from a downstream player to be an integrated energy company. Yeah. Could you please run us through the numbers?
Okay. Now, where it gets interesting is the shareholding structure of Imperial Power is basically Forte Oil, BSG, which is a Canadian company, and Shanghai Municipal Power and Electrical Company, which is arguably the largest utility company in the world. Now, if you look at the structure of the GCEO Power asset itself, 49% of it is obviously still owned by the federal government. Now, 29% of it is owned by Imperial Power, 90% is owned by BSG, and 3% is owned by Shanghai Municipal. Now, in terms of the financial impact of what it has done, profitability-wise, now what you would see is in 2010, the chairman said that it accounted for 10% of earnings after tax, which was about 500 million naira here. It accounted for 12% of your total PBT, which was about 720 million naira here. And as at half year, this year, it accounted for 56% of PBT. Now, the management, I'm sorry I'm using management, but Mr. Akinfemiwa had previously given guidance that it was going to account for as much as 40. But I think they outperformed that number because it accounted for 56%. Now, this was half year. I'm assuming that third quarter numbers, they didn't give guidance as to what its contribution was. But revenue-wise, the plant generated about 7.025 billion in revenues. And I'm going to estimate that if it did generate 56% in PBT, it would have generated about 3 billion. So just cumulatively, it's done about 3 billion for an asset that was acquired at a cost of about 20 billion. And this is 2 years. Okay? Now, Forte Oil in itself. These were the key. What we basically did was a price analysis of that acquisition announcement and stock price since then. Now, from when they announced it, the stock price was at 32.50. Now, at every point you see here was some specific key events in the life cycle of Forte Oil. Former handover of assets. By then, the price had risen about 73%. When they submitted their audited accounts where they declared a 4 naira dividend, the price had risen a further 60%. Inclusion into the MCSI Frontier Index, the price rose 38% after that. So basically what you've seen, almost for every announcement for Forte Oil, you've seen a positive market reaction. Now, from the announcement of the acquisition of GCEO to date, it's risen about 792%. The NSE Oil and Gas Index, in the same time, has risen 81. Just 81%. Okay? But there is a challenge. Now, the thing is, the basic challenge you now have is because the price has risen substantially. The question a lot of people ask is whether there isn't a disconnect between the price and the level of earnings. Earnings-wise, full-year estimates, we have projected that earnings-wise they should do, give or take, this plus or minus 4 naira 20 kobo. Earnings are currently about 3 naira 20, 3 naira 21, 3 naira 23. So this is Mobile, this is Total, this is Corn Oil, this is MRS, and that is Seplat. So conservatively, you estimate that full year, they should do about 4 naira 28. Now, where it gets interesting is because right now the value has risen from 32 to about 290. PE-wise, it's above the sector average. Now, the sector average is 39.53, and Forte Oil is currently at 67.
Well, so basically the idea is that it's outperformed.
It's outperformed, yes.
But the question is, how has that happened? What's the magic wand? Despite the fact that we've seen a lot of volatility in that space.
Okay, good. I mean, from the analysis you can see here, you can see that the achievements are quite, or they are well tied to the stock performance. And it's very simple. Forte Oil PLC today is not just a downstream petroleum marketing company when you compare us to our peers.
Yeah.
We are what we term ourselves as an integrated energy solutions provider. And today we're involved in downstream petroleum marketing, power generation, and upstream services. Now, when you look at what what the three aspects have to bring into the basket, you see a true reflection on the entire analysis you've just seen. However, to most people look at it from the downstream perspective without having a full understanding of the entire mix, you know, and this is just the beginning. What we intend to do is to be present across every point of the energy supply chain, you know, and that's in line with our vision of being the foremost integrated energy solutions provider in Nigeria. So that's the reflection you see. So the real comparison shouldn't be to the company, which is Forte Oil PLC, but the entire group.
Group as a whole.
Yeah.
I'm going to ask you about your projections towards the next 18 to 24 months, but Boyega had a question for Mr. Julius, and he was speaking generally about that disconnect.
Yes.
So, Boyega,
okay. What I wanted to ask, first of all, is now, going through your financials, your turnaround time for receipt of subsidy payments has gone from 45 days to about 270 days, which is, give or take, almost more, at least about 70% of a year. Now, that, I'm going to assume, puts more strain on you financially. There have been subsidy payments. The government has announced subsidy payments of about 413 billion. Has that been paid? How is that likely going to impact you?
As we speak today, we have not received any payment.
Okay.
We are aware the executives have approved, and today we read in the papers that the executives are trying to get the approval of the National Assembly. We are all aware that we just have about 100 billion subsidy provision in 2015 budget. So, of course, for you to pay 413 billion, it means you need to get some appropriation.
But that's what's outstanding.
Yeah,
the total is about 635.
What's outstanding today is about 635.
Yes.
Excluding FX differentials
yes.
and interest.
Yes.
But what the executive approved was about 413 billion for now.
Yeah.
But to make that payment, they also need to get the appropriation.
But still speaking about subsidy, I mean, the government had a chance to remove subsidy earlier this year when
February, when it was about 3 naira.
I mean, landing costs probably fell.
The differential was about 3 naira.
Exactly. So, and I'm thinking to myself, we didn't remove it. Now we're in a quagmire where we have to pay a lot for it. We're having to go back to the National Assembly. We're having to go back and forth. What's your take on subsidy? Should we continue?
I think subsidy, the removal or the continuation of subsidy falls within the purview of the government. Yeah. Every government has its policy, and I believe one of the things that is important to this government is what I would call, or I would term, social inclusion. I think it's too early for us to for the government to tell us if subsidy is going to be removed or not. I think we should give them some time to study the entire dynamics. I believe rather than remove subsidy, first of all, I think what should be done is to first of all see how we can curb the leakages within the subsidy mechanism itself. Yeah. So we need to start looking at it that, I mean, from the point of actual demand. Is the demand real or is it superficial? And then from there, we begin to look at the other subsidy bills of like the foreign exchange differential, the payment. If all those can be adequately managed, we will see that the subsidy may still fall within what the federal government can afford. However, this is me speaking
from outside the government. Yeah. Well, Mr. Julius, I wanted to ask, though, 18 to 24 months, there was a report saying that crude oil prices may still be a bit volatile. Yeah. The prices may be a bit subdued. Now, I'm asking you because you get to look at the numbers, and investors look at the profitability of the company, and they're thinking to themselves, dividends, my share price. How are we going to navigate this 18 to 24 months?
Okay, just to mention quickly, the slide in oil price definitely affects our revenue, but our margins are actually intact. We operate within the downstream, and then we have power generation and the upstream services. For upstream services gets impacted negatively in the sense that the people or the companies we service, of course, when the revenues drop, they begin to renegotiate the contracts. But largely, that business contributes just about 7% to the entire group numbers. So for the downstream business, our margins remain intact. For the power business, is not negatively impacted by that. For us, I believe is within the next 18 to 24 months, which takes me back to your point, Boyega. Yeah. It looks like the earnings are really small now, and then you are wondering why would the share price get to 290 with earnings of 4.28 cover. The point is you don't buy a share price based on historical facts. What you do is you look at what is going to happen in the future. Yeah. I think what people are saying clearly is the fact that this plant is operating at 33%, and today we have about 4 billion annual profit coming from the plant. By this time next year, we expect that we'll be operating at 100%. Next year earnings, we are looking at about 12 billion from the power plant.
From the power plant itself?
In itself, what that means is that the numbers you see today as our earnings, seeing it at 4 naira, it means you should be looking at nothing less than 11 or 12 naira.
Okay, so that's a tripling in your earnings.
It's difficult to compare a Forte to any of the other companies you just showed now.
There's no utility with the exception of maybe a Transcorp.
Absolutely.
But that wouldn't have been ideal because Transcorp also has other businesses.
I just wanted to put that in proper context. So if you look, for people who have the fact that this major overhaul is ongoing and we'll be done with this major overhaul in the second quarter of next year.
The second quarter of next year.
It makes a lot of sense for you to buy now because you know that earnings will triple. Okay. And if earnings would triple, you wouldn't wait till earnings triple for you to get in.
Yeah. So because I looked at it from the context, I'm sorry, but I looked at it from the context of the Mercurio deal. When the Mercurio deal was done, valuation was about $200 million, 17%. You know, valuing your share price then at 180 naira.
Yeah, sure.
Using exchange rate, it was valued at 189, which was a 39, almost a 40% discount to what your market price was then. So I was of the opinion of, okay, that if Mercurio values, because they're buying such a huge stake, and they're valuing it at 180 and it's at 250, is there likely going to be some type of convergence between that differential?
I think what you're looking at is the point at which the announcement was made.
And
the
when
Mercurio deal itself was probably struck before that time.
Okay.
And of course, when you want to strike a deal, you don't strike saying I'll pay more than what I can get in the market. If you want to pay more than what the market currently offers, then you can as well go to the market. And if you also look at the volume, $200 million today is 50 billion naira.
Yeah.
So if someone is bringing 50 billion naira to the table, of course you expect a discount. But I'm saying the point where it was announced was after we got some approvals.
Okay.
And that was when we could announce it.
You know, the basic thing is most of the information I have would always be based on your announcement.
Oh, sure.
But I was going to say something else. I was going to say in your financial statements, you also mentioned that for the GCEO acquisition, you still have about 11.2 as outstanding debt on that asset. Was some of the cash flow from the Mercurio deal, how is that likely going to be utilized? Will some of it be used to pay down some of the debt? Because GCEO, as you rightly said, is a cash cow right now. It generates about 3 or 4 billion. So I would assume that the cash flow from that can be used to actually service a greater proportion of that debt.
I also wanted to ask, you said you were taking the GCEO plan from 33% to 100%. How are we funding that increase? That
is basically coming from the major overhaul. The major overhaul itself has been awarded, and the contract.
I'm talking about the funding.
That's Siemens. It was $83 million.
I mean, $83 million, and the funding was basically a combination of equity and debt. Equity being the cash reserves of GCEO itself. And then we got monies from BOI, Bank of Industry, through First Bank of Nigeria.
Okay.
So we assessed about 10 billion naira from BOI, and then the balance came from equity.
Then Boyega was showing me something significant earlier. You were talking about the exchange rate differential.
Yes, they did have, in their 9 months results, they posted a net foreign exchange loss of about 1.05 billion. They had a foreign exchange loss of about 1.5, then a foreign exchange gain of about 480. So netting both figures off, it was about 1.05 billion. And that was the key thing that I noticed that impacted the differential between last year's performance and this year's performance.
Which is why you see a 44% increase in our admin expenses.
Yes.
The only reason for this is the acquisition finance for GCEO itself
was dollar denominated, okay?
Now we've exited that position.
Okay.
At that time, the exchange rate was 155, and we exited at about 190.
Okay.
So, and the
that exchange rate differential.
Yeah, so the exchange rate differential was what came into that place.
That was the 1 point.
Yeah.
Okay. Another thing I was going to ask was regarding about 500 from your other income, the line items, your other income. About a quarter of that, 20% of that came from sale of an asset. One time item.
520
yeah, but you didn't yes, investment property. You didn't give any, you just said investment property. And so I was wondering, okay, obviously because
what other disclosure do you IFRS is quite clear as to what I need to tell you. We have sold an investment property.
You sold an investment property.
Okay. Well, I've disclosed what I got paid for it. I've disclosed the value in my books. I've disclosed the profit. Okay, you want me to tell you the location of the
Well, I was going to ask, moving slightly away, this is a concern for all of us, basically, Nigeria as a whole. Q2 GDP numbers were the lowest in 10 years. There are indications that Q3 may be worse.
Yes.
And Q4 is actually tending to the fact that it may even be worse than Q3. The MPC is coming in a few days. What do you think? I'm trying to think outside the box, and I'm asking everybody that comes on the show, what do you think we should be looking at as a country, as a nation?
For us, definitely the slowing rate of the economy is definitely going to affect consumption.
Yeah.
And we're beginning to see that across board. Even for us, energy retailers, we can see the slowdown, the reduction in consumption. So part of the revenue drop we've seen is not only due to the crude oil price drop. There's also an element of availability of fuel products for us to sell, and also there's a fraction for consumption. We've carried out some analysis and a survey. I've actually seen that consumption is beginning to drop on energy consumption. Personally, we've gone to monitor retail outlets where we see people. There's something that we do even at the executive management level. We try to observe consumer behavior. And we've seen instances where people even buy fuel as low as maybe even 300 or 400 naira compared to
what is selling at the fuel?
No, compared to maybe a year ago when they could buy about 1,000 or 2,000. We've also seen instances where even people have to cut down on the use of diesel. True. A lot of rationing is going on because of the drop in consumption. But that said, like I said, I think we still need to exercise a bit of patience with the new government. I think MPC would meet. I do not see any changes in terms of devaluing the naira
or such
in the
actions.
Or such actions in the short term, in the immediate term. In terms of rates as well, I also think it will be fairly stable for now, because we still need to check if these are if this is actually trying to block the leakages or trying to actually grow the economy. There's still a lot of time for us to make that observation or make those observations before key steps are taken. That's our own perspective.
Well, to round up before, I don't know if Bega has any other questions, but I want to ask Forte Oil, what should we be expecting from you 12 months, 18 months down the line? Any big deals that you're going to give us?
Julius has said we should expect earnings of 12 naira, and I'll hold him.
Outside that, sure. Any acquisition strategy? What are we doing? What are we looking at?
For us, we always have something new in the offing.
Exactly. That's why I'm trying to get...
Today, we are the fastest growing downstream petroleum marketing company. If you look at the significant increase in market share from 2011 to date.
Yeah.
We've acquired market share in the tune of, I would say, of about 8 to 9%. We've grown our market share by approximately 9%.
Yeah.
Now, and what has been responsible for that? A lot of organic acquisition in terms of business expansion, expanding our retail outlet reach, not only expanding in terms of numbers, but also expanding in terms of strategic locations. So where we can actually capture traffic We constantly monitor metrics such as what we call the station density. That is the number of stations we have versus the population. And then in what areas do we have those stations? Are these areas where we have the low or the middle or very high class, high income earners? So these are the things that we're looking at. Now, again, alongside the organic expansion, we will keep on looking at an opportunity for an M&A because it gives us, what's it called? It gives us the faster routes to becoming the premier. To becoming the premier. That's where we're really working at. So that's on the downstream side. Julius has already spoken about the power, which of course will ramp up to about 435 megawatts 1st of July 2016. We are definitely on course for that. In terms of our upstream services, we're very, very ambitious. It looks like a small company today, but the vision is to become the Halliburton of Nigeria in terms of what we're doing. We actually intend to bring in additional services, that we can offer not just the IOCs, but also the indigenous producers. And we believe that we are in pole position to do that because the Local Content Act actually favors all our actions in that regard. So we're going to tap into that opportunity and grow that business. So the future for Forte Oil is very bright. So when you look at 24, you said 12 to 24 months.
Yes.
I'm sure we will still have more corporate actions that will also guide that share performance. A lot of people, some people know what we are doing, some people do not know. The ones that know, like Julius earlier said, they've taken a position. The inflow from Mercuria would also be used to carry out a lot of business expansion, improve the working.
The inorganic growth.
Would it be used to, at any point, will part of that be used to pay down debts, any debts in relation to Gergo or...
we'll consider the benefits of both.
Okay.
Inorganic growth expansion. We'll also check with paying down repayment of our obligations. So we'll see which is better for our shareholders.
Because I would just say own the asset in its entirety, know that you don't have any outstanding.
But to answer your question on the year-end expectations, we believe that we'll close the year at about 7 billion. And of course, our shareholders should expect a robust distribution subject to
you were 5.5, okay, so 7 billion.
Yeah, we're looking at about 7 billion.
5.5, so 7 billion. PBT?
Yes, 7 billion.
PBT?
Yeah, and our shareholders should expect robust distribution subject to full considerations for our cash needs and our growth.
7 billion would be about a 5 naira plus EPS. 60% payout of that would be like 3 naira.
That is robust means 60%. In his head. Thank you very much, sirs. I really appreciate you for being with us on the show. And do remember, before you make any of those disclosures, because you said something which was significant. You said so people know what you're doing. We here want to know what you're doing, so we can let our people know. All right, we'd like to thank Mr. Akinfemiwa, CEO of Forte Oil, and Mr. Julius Omodayo-Owotuga, the Group CFO of Forte Oil. Also, we hope that we'll have you on the show again. Thank you very much for joining us.
Thank you very much.
That is the much we can take on this edition of Business Nigeria. Till same time next tomorrow, basically, keep doing business, Nigeria.